Hey everybody, and welcome back to the channel. My name is Brandon. If it is your first time here, you can hit that subscribe button. If you haven't already seen my video on the RRSP, which I've done a full-on video for beginners, for brand new people that are starting out, if you're very new to the RRSP, go watch that video and then come back to this one, or watch this one and then go watch that, because it'll make a lot more sense if you are brand new. But I'm assuming here you've got a bit of knowledge on the RRSP, and we're just going to be looking at some tips here. I will link that down below. Deadline for contributing to your RRSP, like I said, is March 2nd. So although we are technically in the new calendar year, you have a couple months to actually make a contribution, and then you can use that contribution against last year's income. So in this case, as of filming this video, although I'm contributing today in 2020, I can actually use that contribution to deduct against my 2019 income. So you do have a couple month buffer period, with the deadline being March 2nd. Now that leads to another just reminder here in terms of how much money can you put into an RRSP. You can put in 18%, you can put in up to 18% of the previous year's earned income, okay? So what I mean by that, with a very simple example, is if last year I made $100,000, let's say this, if in 2018 you made $100,000, your contribution space would be 18% of that. So $18,000 that you can contribute in 2019. So it always looks back at the previous year at your earned income. You take 18% of that, and that's your space. Of course, it is cumulative. So if you've been working for a while, you're building up space. There is a limit on that. If you're a high income earner, it does cap out at about $26,500 is the limit that we are currently looking at for a given year. Let's say you're making, $1 million per year. It's not 18%. It will cap out. But for most people, just as a reminder, we're looking at an 18% limit of our previous year's earned income for our contribution space. You can always go online to my CRA My Account website. This will tell you all the details regarding your specific account. And by the way, this is a government run site for those that, some people are a little bit fishy about it. This is the legit site. Or of course, you can look at your notice of assessment to find out what your contribution space is. Point number 3 here, another tip to factor in, is that if you are somebody with a pension plan at work, a registered pension plan, which some people have, some people don't. If you don't even worry about this. But if you are getting some of your income deducted and put towards a pension plan, that actually does count towards your RRSP contribution space. So let's assume you're allowed 18% in a given year. You can't put 18% of your income into your RRSP, deduct those taxes, and then through work be doing a whole bunch more. Combined, it's 18%. So that is definitely something to factor in based on what your specific plan is at work and what type of pension you're running. You can't really double dip there. And in fact, you'll have to do what's called a pension adjustment. Let's assume that with work, your pension, you're putting away 3% of your income, 4%, whatever the case is. Just keep in mind that when it comes to contributing to your RRSP, you are going to have to factor that in and essentially deduct that out so that you don't over contribute, you don't double dip. That's a very important thing to note if you are somebody in the case with a pension plan. For a lot of us nowadays, this just totally doesn't even apply. Moving on to tip number 4, which is a very important one. This actually stems from a conversation I had with one of our students regarding the RRSP. Tip number 4 is that you don't have to use your contributions against your income. You don't have to deduct them immediately. And what I mean by this is that if you put money into your RRSP now, you don't have to deduct that. You don't have to take the tax break in the year that you actually put the contribution in. You can do that a year later. You can do that a couple years later. You can push that off down the road. And where this becomes important with our said student, without getting into too much detail, obviously, she knew for a fact that over the next couple of years, she's going to be receiving a much nicer income. She's going to be in a higher tax bracket, which is really when we can utilize the deductions to get the most bang for our buck on taxes. So question is, should I wait off with the RRSP or can I start now? You can contribute into your RRSP, have your investments sheltered from tax. You can go out and invest that capital, get the snowball rolling, get compound interest working for you, and you can choose come tax time how much you want to deduct from your income. So let's assume, sticking with our example, if you put $18,000 into your RRSP, you can decide whether you want to use 0 against your income, or last year's income, 0, 5,000, 1,000, 9,000, 18,000, you get to choose, but just keep in mind that you don't have to use it immediately upon contribution. Very important tip to know, which a lot of people do actually get confused about. You can actually push that forward and use it for later years. Point number 5 is regarding actually withdrawing money from your RRSP. This would be somebody that already has an RRSP open, and we do just have to keep in mind that you are always able to withdraw money from your RRSP. There's the common misconception, the common myth that you're locked in and that you literally can't take money out till retirement. You absolutely can take money out. It's just an account like a TFSA, like a cash account. If you want to take money out, you surely can. You just have to face the tax consequences in the year that you do that. Because let's recall, when you put money into the RRSP, you're getting a tax break. When you take money out, you have to include that amount as part of your taxable income. And here's a quick little chart or a graph regarding withholding tax, because if you do withdraw money from your RRSP, they will be subject to withholding tax. If you take anything less than $5,000, 10% of that is automatically going to be withheld so that they can send that to the government later. Anywhere between 5K to 15K, 20% will automatically be withheld, and 15K plus, they're going to be a 30% withholding tax, which will then get sent off to the government. So just keep this chart in mind if you are somebody that is looking to withdraw money from your RRSP. Last thing to point here, very important tip / reminder, we do not get this contribution space back with our RRSP. When we take the money out, this isn't like a TFSA where when we take it out, we get that space back the next year. When we withdraw money from the RRSP, if we need it for a vacation, if we really just want to pull money out, you lose that space indefinitely. That actually leads into the second segment, the second half of this video, which is talking about mistakes with our RRSP. And we got 4 mistakes here to talk about. These are mistakes that are commonly made, and hopefully by bringing them up, you can catch them and maybe not make them yourself. Starting here with mistake number 1, this is a very, very common one. It's a huge mistake to put money in your RRSP and not invest it. In other words, just leave the money there in cash, like it's some sort of savings account where you can't go out and buy assets. The RRSP is a registered retirement savings plan. That is an investment account. And within that account, when you make a contribution, you can buy all types of assets. If you want to be super safe, at a minimum, pop it into a GIC, maybe even like a cashable GIC if you feel like you'll need it. A bond, some sort of investment where at least you're getting some sort of interest. You can obviously go out and buy stocks. You can actually build a portfolio of investments, ETFs, mutual funds. You can do all of that within your RRSP. That's actually what we specialize in our academy, is teaching you how to build that up if you are a beginner. But simply putting the money in cash and letting it sit there in cash, you're leaving a lot on the table. Again, this is a retirement account. Assuming you're going to be putting money here for a number of years ahead of you, you really want to have that money invested. And mistake number 1 is just putting it in and simply leaving it as cash. Second mistake, which is very common to happen, I can say for a fact, I've been guilty of this myself, and that is withdrawing money too early, withdrawing money that you really didn't need to withdraw. And as I just touched on a matter of seconds ago, or a minute ago now, when you take money out, you do not get the space back. So if you want to go on a vacation to Cabo, you want to go out and do something silly and take out the money, do your best to look for other options. Go out and make more money. Go look at your TFSA first before you think about taking money out of your RSP, because once that space is gone, you can kiss it goodbye. Now, there are a couple exceptions, and this is something that you very likely have heard about when it comes to the RRSP. There are a couple cases where you can take the money out and not lose the space and actually not really face the tax consequences. That would be under what's called the home buyer's plan, as well as the lifelong learning plan. And I'll include links below if you want to go look into those if that is a case for you. But you actually can take out certain amounts of money if they are for specific reasons. For example, purchasing or building your first home. If you are somebody that wants to go back to school, the government then does allow you to dip into your RSP, basically take a loan from yourself, to pay interest. You just borrow the money with the expectation that you will pay it back over a number of years. So those are the 2 exceptions. But other than that, if you're just looking to blow money on something stupid, try your best not to do it, because you're not getting that space back. Mistake number 3 is regarding over contributions to your RRSP. And again, there are limits to this, which is why you should definitely go right now to CRA's website and find out exactly how much space you have, because especially when you do get into, when you're in a situation where you have a pension plan and then you have your RSP, it's not uncommon that people make the mistake and actually over contribute. They go over their limit. And if you do go over the limit, over your personal limit, you are subject to a penalty. So the penalty with an RRSP, it's 1% charged per month on the excess overage, on whatever you've gone over your maximum. There is something to keep in mind, that you actually do get a little cushion. So you do get, everybody gets this. There's actually a $2,000 cushion that you have. You can over contribute up to $2,000 without being charged, without paying a penalty, which again could serve very, very useful for someone that is in, does have a more complex situation and they may be going over a little bit here and there. Just do your research beforehand. Make sure you've got your situation sorted out so that you don't find yourself in that case. But yes, over contributions are subject to a penalty, 1% per month until they get paid off. But you do have a little cushion space as a tip, a $2,000 room on top of your contribution limit. Moving on to our fourth and final mistake and final thing to wrap up this video. Regarding the RSP, the biggest mistake, I believe, in the long term, right? These other mistakes, you make a tax penalty, it is what it is. This such as that, you can fix that. Biggest mistake here is blowing your tax refund. And if you're like most people, I mean, some people use the RSP to deduct taxes so they don't owe as much. But for most of us out there, if you're using the RSP, you are going to be getting some money back on your tax refund. You'll get a nice break. Again, these are taxes that you would have paid, but you're getting to keep them now. The government says you keep them. Take these taxes, do what you want with them. And while some people go out and blow it on a new whatever, there's a million things you could go on. The best thing to do with this refund is to take that capital and reinvest it. Reinvest the money that you saved on taxes, because that just gives you that much more money to snowball and to grow. And when you look at the math and you look at how compound interest works over the course of the years, when you reinvest that tax break and you don't, it is miles of a difference. And it's super tempting to want to go out and spend it, which is why most people do. They take a quick vacation. They go out and buy, a new this or that. The best thing that you can do is to take that money and reinvest it. Maybe treat yourself with a little bit of it, because, you got to do that every once in a while. But if you can use that tax break, that tax refund efficiently as possible, pop it back into your account, and that will do wonders for you over the year. That's really the true power of the RRSP. And before you know it, you'll really get that snowball rolling if you commit to doing that year after year after year. So guys, those are just a few tips that I wanted to share with you today. Hopefully I was able to address some of the questions that you may have had in your head during this video and cleared some things up for you guys. Like I said, if this stuff is still confusing to you, go watch the previous video that I did. That's a very entry-level video for beginners, which should give you an overall breakdown. These are just a few peripheral tips, which I think are definitely important to factor in. But to get the full picture, you're definitely going to want to go check out that last video, which I did, which I will link down below. If you enjoyed the video, if you found it helpful, feel free to drop a quick thumbs up on this one. That is an awesome way of showing your support for the channel. Subscribe, because we post videos on Canadian content, stock market investing, all sorts of stuff here. We do weekly videos, and we even have our investing academy. If you are a beginner, if you haven't even got your stuff set up and you really want the guidance click by click on opening your accounts, funding the accounts, setting a strategy, going out and buying funds, stocks, dividend stocks, all that, you can learn more about our investing academy, which is that first link down below, or it'll be a link down below. I'll also link the RRSP video down below. You can find that all down below the video, but we'll wrap it up there. Thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.